If you're thinking about doing a renovation loan when purchasing a home, one of your first steps is to find the lender that understands renovation loans. I'm here today with Sherry Eccles and Justin Bender from Norcom Mortgage to explain why renovation loans might just work for you.
Hi there, how are you?
Tell me a little bit about yourself, Sherry.
So my name is Sherry Eccles. I have been in the mortgage business since 1992. I was 12 when I started. And so I have been doing a lot of work predominantly in renovation, construction, and first-time homebuyer work. My passion is trying to help first-time homebuyers get into houses and get those houses fixed up so that they're the home that they've always dreamed of.
Awesome. What about you, Justin?
Yep, my name's Justin Bender. I've been with Norcom for 8 years, and I couldn't imagine a better place to be. And I'm excited to see what we're going to put together here with it.
Let's hear what Sherry from Norcom Mortgage has to say about renovation loans and the benefits.
Sure. What a renovation loan does is it allows a borrower to either pay for the purchase or the refinance of their home and add in the cost of repairs that they would like to include. In addition to the repair costs, there are additional costs that go along with that, like paying for inspections or permits or those kinds of things. And all of those costs can also be rolled into the mortgage so that you're not having to come out of pocket with all that money. And we also allow a little bit of an extra, what we call a contingency fund in case you go into a wall and find something unforeseen. So the benefit of putting it all into a mortgage is that it's going to be amortized over a 30-year period. You've got tax deductible interest, a much lower interest rate than a lot of other financing mechanisms, and it's all one payment instead of having to pay a separate payment for, a home improvement loan or something.
There are a lot of stigmas when it comes to renovation loans. One of the biggest ones is that you have to buy a foreclosed property or a rundown property in order to do the renovation loan. That's not necessarily the case. You can use that renovation loan for many different options. You could buy a $350,000 house and put $100,000 into it with the renovation loan. Let's hear what Sherry from Norcom Mortgage has to say.
It certainly has its place in doing those properties. It's really important. It helps people get into properties in a distressed sales situation where they almost always wind up with instant equity. But where it also can have a huge amount of value is the situation where you've got a borrower that's cash poor and the seller's taking the appliances. So they need a new refrigerator, they need a washer dryer. They might need to do a little bit of cosmetic work. If they're looking to just customize or gut a kitchen and bathroom, we all have been in those situations where it's like, I really love that house, but I had one that I did just specifically because the borrower really wanted central air, and they found this house that checked all the boxes, but it didn't have central air, and they were about ready to walk away because that was a deal breaker for them. And I said, what if we did a reno loan and just installed central air? And it made the sale happen.
Justin, do you have anything to add about any of those stigmas?
But I've also personally did a 203K on my personal property, and it's great, especially for the contractor. When my contractor would email, and within an hour, Trish, you're dealing with the same human on the other end of the line. She would answer, send out the bid, send out the draw, whatever they needed, and the contractor's paid and continues the work. The process is very smooth.
Awesome. That is the nice thing. You are working with one person throughout the entire loan process, correct?
Correct.
One of my main focuses for the renovation loans is there are so many homes out in the State College area that have the old bathrooms where it's the pink tile, the yellow tile, the blue tile, and the tubs match that tile and the toilets match that tile. You know right away that you're going to replace that, but if you get this renovation loan, you can replace it quicker and put that right into your loan, which is a very nice benefit. So that's why I really like the process, and helping everybody design their bathrooms to their dreams.
Absolutely. Who doesn't love a dream bathroom?
Right. And when it comes to real estate, kitchens and bathrooms.
For sure.
So, and the biggest thing that I'm seeing right now with kitchens and bathrooms, we're either adding an extra bathroom Or we are expanding the kitchen, opening walls so that the kitchen can become a great room and go into the family room area. We're seeing a lot more of that as well.
Absolutely. And there's a lot of right place, wrong size, where you're either right sizing the bedroom count, bathroom count, or like you said, expanding more open floor plan, or even you can build on. And you can even you can even add an attached accessory dwelling unit or detached accessory dwelling unit if you have, elderly parents moving in, or you're looking for a little extra income, or your kids are in college and looking for some independence. There's all kinds of different utility for these.
Sherry, can you explain to us the different types of renovation loans?
So there are a number of programs that are available, and so I'll start with the ones that are federal programs. So the U.S. Department of HUD under FHA offers the 203K program. And so that is a great program for first-time home buyers, and they're a little bit more lenient on credit. And then there's some other features that we can get into later that kind of set them apart. And then there's also VA. So for people that are eligible for a VA mortgage, so, formerly formerly active military, or if they were in the National Guard for a period of time and are eligible, then they can get 100% financing to buy a house and fix it up. And so that works out really well. And then USDA also allows the borrower 100% financing for properties that qualify for USDA, which is actually a significant amount of area is covered by the USDA as well. So those are all federally insured programs. And then there's also conventional loans. Both Fannie Mae and Freddie Mac have conventional renovations. The Fannie Mae program is called the Home Style. The Freddie Mac program is called the Choice Reno. And under each of these different umbrellas, they all have kind of some unique little things that make them special.
There are lots of different advantages to using a renovation loan when you're buying your home. And I have Sherry here to explain what those advantages could be.
The borrower only has to put 3.5% down. They get all the benefits of an FHA loan in terms of more flexibility on credit and to income ratio. And then they can use up to 6% of the sales price as a seller concession if that's something that the seller will allow under the contract. So there are those benefits that help make FHA such a strong product for a first-time home buyer particularly, but really for any purchase transaction. And then the other thing that they'll do with an FHA loan, both on the limited as well as the regular, is you can go up to 110% of the after improved value of the property. So using the example of, understanding not all improvements are going to cause a dollar for dollar increase in the value of the property. So you have a home buyer that's looking to do, they're looking to buy a $150,000 house, and the seller's taking the refrigerator with them. And the buyer has been in an apartment, doesn't have a washer dryer. So they need a refrigerator and a washer dryer at a minimum in order to be able to get into the house. And you certainly don't want them using the last of their cash to do that, because they're going to have to buy some furniture and curtains and a grill and those kinds of things. So let's put it in the loan so that it's not going on a credit card or setting them up with a bunch of debt right from the get-go. That after improved value is probably not going to move much just because you put in a refrigerator and a washer and dryer. In fact, it's probably not going to move at all. For $150,000, what they'll allow is that you can go up to 10% above that as a mortgage basis. So we would actually put a $15,000 cushion on top of that $150,000. So they put in some carpet, some paint, or they maybe replace a kitchen countertop or upgrade the cabinets, like, remodel the bathroom. Even though that is going to add value, they're going to be in a good shape where they're not butting up against that after improved value in that particular case, because they've got that 10% cushion. If you have a competitive bidding situation and the borrower finds themselves having to bid above asking price, because of the fact that you can go to 110% on a 203K, if they do a little bit of work so that it can become a 203K, now that extra cushion helps cover that additional cost that they're paying, instead of them having to come out of pocket for the additional money above asking price. The VA for a qualifying veteran can be really a great way for somebody to get into a house, have the funds to fix it up, and not have to come out of pocket really with much at all. You can do up to $100,000 worth of work, and you have 6 months to do it. They are, looking at minor structural repairs. You can't really do new additions or add accessory dwelling units the way you can with an FHA, but it's 100% financing. And you also have the capability with a VA to add seller concessions on top of that that will cover prepaids and closing costs. And the same thing's true for USDA. So now on the home style, one of the unique things about home style is if you own the property free and clear, you can do a renovation loan using a home style to pay for the repairs. And so that's a unique feature. You can also add accessory dwelling units with a home style, either detached or attached. And same thing with the Freddie Mac. It's 5% down, and conventional restrictions in terms of credit, debt to income ratio, seller concessions, et cetera. You may find a better interest rate on those loans. They're not going to have life of loan mortgage insurance the way that the FHA loan would. They really are very similar to the 203K in the fact that, you're either putting 3.5% down or 5% down. The repairs that they'll allow are similar. The other unique thing on a home style or Freddie Mac is they'll allow second homes as well as single family investor properties. So if you have somebody that wants to buy a single family that they want to rent out, they can do that using this program as well. All of them are eligible for purchase or refi. And really what it takes is sitting down with a seasoned professional to be able to look at what your particular needs are. And there's almost always a program that's going to be able to accommodate. The best thing that I would say in terms of figuring out the best one would be call Justin and the team at the Hollidaysburg office.
What's that phone number, Justin?
They call 814-695-0909.
So Sherry, if I wanted to renovate my current home that I live in, which loan would I want to use to do that?
That's a great question. And all of the renovation loans do allow for a refinance option. What I would say is I would look at, what is your current credit profile? What is your current debt load? Because FHA tends to be a little bit more forgiving in terms of, having a higher debt load, and a little bit more forgiving in terms of credit history and that kind of stuff. And then also, what is it that you're looking to do? If you are looking to tear your house down and build a new one, then I would say definitely the 203K. If you're looking to do some repairs that aren't going to increase the value of the property dollar for dollar, you may want to go 203K so that you can take advantage of that 110% cushion. If you have a ton of equity, then it becomes less important. On the 203K side, you could roll that into the home style. If you wanted to add a pool, that's something that you can do under either the home style or the Freddie Mac loan that FHA does allow. So, it would really involve a detailed conversation of what you want to do and what your profile is to figure out what the exact program would be for you.
And Justin, if somebody wanted to call Norcom, what's that phone number?
They're going to want to call 814-695-0909.
Well, thank you very much, Justin and Sherry from Norcom Mortgage. We appreciate you coming on today. We appreciate you giving all this wonderful, wise information, and we hope you have a great day. Again, Justin, if somebody needs to get in touch with you with a renovation loan, what's that number?
They need to call 814-695-0909.
Thank you so much. And Sherry, you have a great day.
Thank you. Thank you so much for the opportunity to come talk to you. We appreciate it.
Thank you.